It's official. The RBA is cutting the cash rate. And is this going to fuel Australia's property market into the next wave of growth? Let's take a look in today's video. So the RBA cuts the cash rate for the first time since November 2020 in a huge boost for homeowners. The Reserve Bank has cut the official rate from 4.35 to 4.1%. The move was widely expected, with the money markets factoring in 85% chance of a rate cut in the week prior to Tuesday's announcement. Households with a $500,000 mortgage will now enjoy $80 in savings every month, or $960 a year. For those looking for more cash relief, they'll have to wait 6 weeks with the central bank next meeting in March and April. So down 0.25%, which is $80 a month on a $500,000 mortgage. Now, I've got a fair few more loans than just $500K, so I'm going to be saving more than $80, which is nice, assuming that the banks pass on these savings. And usually what we tend to see is that some of these banks with their variable rates are a bit slower in dropping their interest rates in a reflection to the RBA cutting the cash rate. But we'll have to wait and see what happens there. But this is going to only positively impact the property market this year, with property market being largely driven by speculation and people's sentiment. And so if people have the ability now with a lower cash rate dropping by 0.25%, it's not just $80 being saved every month on a $500K mortgage, it's the additional borrowing power that's coming for people in their serviceability calculations that's going to be significant. Now, that's far more likely to be tens of thousands of dollars in borrowing capacity from a 0.25% interest rate cut, which when you add up across Australia's entire population and everyone looking to get loans, that means people can pay more for property if the cash rate continues to be cut later this year as well. So let's read on about some more talk about the inflation in Australia's economy. So the main reason that the RBA gave around inflation was that it had fallen substantially from its 2022 peak, and the board was confident price pressures were moving sustainably towards the midpoint of the 2 to 3% target range. Inflation has fallen substantially since the peak, as higher interest rates have been working to bring aggregate demand and supply closer towards the balance, the board released in today's statement. In the December quarter, underlying inflation was 3.2%, which suggests inflationary pressures are easing a little more quickly than expected. There has also been continued subdued growth in the private demand, and wage pressures have eased. These factors give the board more confidence that inflation is moving sustainably towards the midpoint of the 2 to 3% target range. Now, the interesting point will be whether we see that inflation drop again down from 3.2% in the next quarters of data, which will be released probably in April, May. So what we're wanting to see, what the RBA on the board of the RBA is expecting, is that there's going to continue to be this slowdown because the economy is a bit of a slow moving beast, and therefore they're willing to start letting off the handbrake right now. Now, it's different for different markets. They're talking about wages, property's a big part of this CPI basket. And so property actually might benefit while other areas might still be slowing down. So whether property runs at a different speed to other areas of Australia's economy will remain to be seen. Well, let's take a look at some of the graphs of the cash rate, because I think that's quite interesting. On screen here, you can see the top graph, which is Australia's official cash rate. So this is 1.5% in August 2016. And this is when I would have bought my first property. So I would have bought with a 1.5% cash rate when I bought my first property. When I bought my second property, would have been around 0.75% cash rate. And then it was slashed to essentially no cash rate, or a low of 0.1%. And then we've had that big hike, you can see here, from April 2022 up to December 2024. And now we've had our first cut down to 4.1%. If we zoom out and take a look at the bigger picture, this is where it gets even more interesting. You can see these are the infamous 17% cash rate in March 1990. The big drops from 17% down to about 4.75%. They regularly sat around that 4 to 5%, up to 7% pre-GFC. Big crash down to 3.25%. And then dropping right down to zero, which just trying to stimulate the economy over the next decade, and then back up to 4.35%. So it'll be interesting. I think a lot of people are expecting more cuts. They're expecting that cash rate to get down to that 3.5% band in the next 18 months. But if you look at the long-term history between 1990 and 2025, I would say it's far more likely that the cash rate would sit at 4 to 5%. And so sitting at 4.1 is probably an equilibrium in terms of Australia's cash rate in the markets. But maybe we'll see it drop into the high threes in the next 12 to 18 months. That's only going to fuel the fire, in my opinion, in terms of the property market and people's ability to take advantage of lending and serviceability, because the biggest thing with property investment is using the capital when you've got it available. That's certainly when Emily and I have made the most amount of money. When I had the serviceability and Emily and I had the serviceability, we had 3 properties in 2020, but into 2021, we drew out $700,000 from Commonwealth Bank. And I was 27 years old and CBA was willing to give me 700 grand or 750,000, $250,000 of equity from each of our properties with offset accounts and cash. So as these rates drop and more people have the ability to refinance and draw out equity, I would absolutely be doing that, because then you're fueling yourself, preparing yourself for that next purchase. Or if you think about it this way, having that money in offset account gives you more buffers, allows you to potentially renovate, make more repayments, give yourself a buffer if you're sick or you're in an emergency. So giving yourself liquidity is going to be so important as you get access to a little bit more serviceability. I'd be looking to meet with a broker and the banks every 6 to 12 months. If you want to find my broker, you can go ahead and have a chat with Nevada and the team at Cube Home Loans. Head over to purposeproperty.com.au and click on Mortgage Broker to reach out to those guys. But let's speculate about what's going to happen moving forward in terms of Australia's outlook with the cash rate in the rest of 2025. Now you can see here that CBA's economic team expects 4 0.25 percentage cash rate cuts in 2025, with the first one expected this February, which has now happened, and then 1 cut per quarter in the following 3 quarters. That would mean that, as you see on screen here, they've already done that first rate cut from 4.35 to 4.1. That would drop it all the way down by the end of 2025, down to 3.35%. Now, a full percent is a lot of money on $500,000 of interest repayments. And if you've got several $1 million of debt, a full percent really adds up in terms of your interest rate bill. So I'm hoping that they're cutting rates because I'm carrying debt. And so the lower the cash rate is, the more advantageous it is for me as an investor and building out a property portfolio. And anyone who's taking on leverage, whether it's in stocks or property, is going to benefit from the cash rate being cut over time, as that's going to stimulate more people into the markets as people have more cash basically to invest and the ability to further invest as well. So what do you think? Do you think they should have cut further and cut a 0.5% off straight away? Do you reckon they're going to continue to cut at 0.25% for the rest of this year? My gut feel is there will be more cuts, and they are going to only go down in 0.25% increments, because I think they might put the brakes on if they see inflation creep back up again. And so I don't think it's going to be a rapid drop off in terms of the cash rate. But any cash rate drops are welcome from my point of view, because that means more serviceability for me and lower interest rates on mortgages. And I'm sure a lot of people watching these videos are excited about it as well. So let me know what your thoughts are in the comments below. And if you're looking for a Brisbane-based buyer's agent to help you buy your next property here in Southeast Queensland, then head over to purposeproperty.com.au to book in a free chat with myself. And if you want to see some more content on real estate renovating and financial freedom, give this video over here a click. I'll see you in that one. Peace.